Here is day 15 of my 75k evaluation challenge, where I mainly trade the AM and PM Silver Bullet trading sessions. This is for the 7th of June 2023. Took one trade in the AM session, and hand it over to Past Nick for some context. Okay, I just took a trade, and just like yesterday's video, I want to provide a little context to what I was thinking as the trade developed. We have a 15-minute chart here. This is going into the Silver Bullet hour. I'm noticing this buy-side liquidity level up above that we're real close to, and I wouldn't be surprised if we swept this. One thing that I did notice this morning, and just like yesterday, we have a potential seek and destroy day, which in my interpretation usually sets up once London sweeps both the lows and the highs of the Asia session, that New York might do the same thing to London. And we've just took out the highs here of London, and now there's a potential that we're going to swing all the way back down and take out the lows. So I use this indicator, TFO. I love it. If you don't need it, you can obviously look at it, but I like to have a little bit of alert there. Okay, anyway, so here's the 15-minute. We'll drop down to the 5 as we begin kind of coming into the hour here. I did notice this line here. We have a pretty good SMT divergence that's developing or has developed on this swing high up here. So at this point, I am definitely willing to go short, even without this buy side taken out. However, I wouldn't be surprised if we head up in that direction. Other levels I have marked out here. I have this volume imbalance that was already violated once, but as you can see, they still are respected in the future. And yeah, okay, so let's play how this plays out. Big wicky candle here, but pointing back to the upside. No moves for me yet. And on this candle here, we come back down. It's a real solid candle here to the downside. And the next candle, we have our very first fair value gap that develops here. Now, price to me didn't take out any significant swing structure or market structure. Yes, it did sweep, some of this liquidity here, but I'm not convinced that this was a liquidity sweep and we're going to go back up yet. Had it taken out these lows down here, maybe over here, then yeah, I would have thought we're possibly going to go back up. But as of right now, we haven't. My clear target or my draw of liquidity obviously are going to be all these lows here, but we have a 15-minute fair value gap that I think price could be heading towards. So I'm all in to take this short here, the distal of this fair value gap, on the edge of the fair value gap. Now I am trying to get better at mapping out a 10-point move, as ICT recommends, to make it a higher probability trade. And again, in my interpretation here, we can definitely fill these fair value gaps. This is a 15-minute overlapped by a 5, maybe? I don't remember. But either way, we have, I think, a clear 10 points. But if we were to go to the seek and destroy profile that I'm looking for or anticipating, we have way more than 10 points. So I'll definitely take this trade. I'm actually going to probably aim for these lows right here. It's a low-hanging fruit. And I'll put my stop loss just above the fair value gap candle. And yeah, okay, so let's see how that trade played out. Here's the execution of the trade. This is kind of what you already saw before. This is real time, or it was recorded of real time. Me kind of developing the idea here that I've already explained. One thing I want to highlight here is the SMT divergence really gave me confidence to take a sell here. I'm really glad that appeared. So I get tagged in for 2 contracts right away. And I'm loving the reaction that we get off this fair value gap. It immediately goes into the direction of my draw of liquidity. And that's kind of important here, that I do experience a lot of profit. Not a lot, but I do experience some profit early on in the trade, because it starts to go against me. And the reason why I bring that to your attention is because this really kind of messed with my psychology a little bit. I'm not going to say I was emotional, because I really wasn't, but I was trying to be logical here. And this is the danger of hanging out on the lower time frames for too long. I am just looking at the 1 minute at this point. This is the only chart I have on the screen because I'm recording it. So I'm just looking at price action on the 1 minute. And so when we get this somewhat beefy candle to the upside, I can see a scenario where this could reverse on me, especially after we break that short-term high as it just did. So now what I'm thinking about doing is taking one of the contracts off. I do think we're going to revisit the volume imbalance before it does. So I mark the volume imbalance here on the chart, and I get ready to close out one contract at that volume imbalance. I'm going to let the other one ride, either to TP or to the stop loss. But just because of my psychology in the moment, I felt more comfortable taking a trade off. So I ended up taking one off right there. I moved my stop to break even. I screw up the orders here. I had an ATM strategy that I clicked off of. So manually I put in one buy stop loss and one buy stop TP. And that's kind of what I'm doing here. I do move my TP to 25 ticks, take out those swing lows, and then I close the other two pending orders. And that's the trade. I wish I would have trusted my analysis more and left it alone, obviously. However, I do think risking off was the right thing to do for my psychology in the moment. Either way, it's a green day. Felt good. I might come back for the PM. I might not. Who knows? Either way, I'll see you tomorrow. Thank you very much.